want to talk a bit about the fund today. It's the bi-weekly fund update call. Matthew's going to pull up the presentation. He's going to go over it. I'll obviously chime in. Please ask as many questions you want along the way. Now, we have been fully invested since roughly June, July of last year. And I want to be very forthright. When you first start a fund, there's not a lot of money in that fund. It takes a bit of while to ramp up and get going and stuff. But since we have been fully invested, we've done quite well versus the index. And those numbers should come to fruition. We're actually bringing in new capital every single day. We're bringing in more and more money. So it's pretty good. Now the question is, how are the markets going to perform over the next little while? Well, we've got a few tailwinds for us. First, we have a new president coming in, which is Donald Trump. Love him or hate him, that's not the point. The point is he's perceived to be very good for the markets. So we have that tailwind. We've had some good inflationary data especially last couple of days. That's why the market did so well today. So as we do every single update call, we like to bring up a different topic. So I'll let Matthew start out. So over to you, Matthew.
Sounds good. Thank you so much. You can see the screen, right? Fund update, Jan 15th here. Perfect. All right. So thank you for joining us, guys. We're going to get right into this. All right. Generally speaking, we're talking about concentration here, right? And not just necessarily concentration from an academic perspective, but what concentration looks like in practice.
I just want to interject and say, what exactly is concentration? What concentration is, Matthew, your camera's off, by the way. What concentration is this? Typically, a fund in Canada holds, 200. David, maybe you could elaborate on this. How many stocks does the average fund hold in Canada, if you had to guesstimate?
30 to 50.
I thought it was much higher. I thought it was around 200.
You have to be careful of index funds. So if it's an index fund that's tied to a broad index, you're going to have a number of proxies. But I would say 30 to 50 max, like a standard large cap Canadian equity. If you're RBC, well, not RBC, TD Asset Management with $3 billion, you're not going to have. You'll only have about 30 positions because there aren't enough companies that actually you have enough liquidity to get into. But 50, 60, that's it. Sorry, I know I'm raining on your parade. Apologize.
No, that's okay. It's okay. I was looking at some of the reasons why funds underperform the markets in general is because when you have a lot of holdings in your fund, if the S&P goes up 11 and it kind of does this, well, then you kind of do that as well. Then you minus your management fees and you have lost to the index. And that's the statistics bear that out. So what concentration is quite simple. Concentration is what Peter Lynch and Warren Buffett says, when you have conviction on stock, bet big on it. And that's exactly what we're doing. We have a lot of conviction on stocks like Nvidia, TSM, AMD. Why are they significant investments? Why do they constitute such a large portion of the portfolio? Well, it's because the chips and the chip manufacturing will be an integral part of taking humanity to the next stage, which is artificial intelligence becoming a greater and greater reality in our lives and a greater and greater producer of goods and services. The world is going to be a very different place in a number of years as artificial intelligence evolves. It'll take up a lot of human jobs. It'll do stuff that we were doing before, but ultimately it will move humanity forward. But in order to have that done, you need to have data processing. Who makes those chips? Nvidia and AMD make those chips. And then exactly who manufactures those chips? Well, Taiwan Semiconductor. These companies are huge companies that are very difficult to compete against. So Matthew, let's talk a bit more about these companies and concentration.
Yeah, so I think conviction and concentration kind of go hand in hand there, right? And one is identifying the industry in which you wish to be concentrated, and that we've identified as semiconductors or artificial intelligence, and the leaders of this are Nvidia, TSM, and AMD, right? And you could argue, well, why don't you just pick AMD? It's the biggest and best out of all of them, right? And indeed, like it is the largest.
You're talking about Nvidia. AMD is not.
Sorry, Nvidia, yeah. And you could say just choose Nvidia, and it's the largest, and leave well alone, and let's overweight that to the tune that you want. right? And that's true. However, if you look here, that our NVIDIA, TSM, and AMD holdings combined are 27% of the Alpha portfolio. Now, that's a material amount, and we better be strongly convicted that that's what we want to see there. And I think, and not I think we are, because this is a growth fund. This is not aiming to, we're not aiming to get on base here, right? We're aiming to hit a double and get going, or even more, right? So is conviction okay in this type of fund? Absolutely. That also leads to a risk tolerance question, right? Which we've all kind of had with you, or our current investors at least, right? So, why are we okay having 24% in NVIDIA, TSM, and AMD? Okay. So one is, yes, we believe in the AI thesis, right? Because, from a software perspective, even from a hardware perspective, this is going to be around for many, many years to come. We'll cite a PwC article here that, AI could contribute up to $15.7 trillion to the global economy by 2030. Well, that's a heck of a lot. That's a gigantic number, right? That's like saying it's like
Matthew, who came up with that study?
PricewaterhouseCoopers, PwC. It's
They're
a
probably
big
wrong.
core accounting firm. Most people on the planet have heard about it, right?
Yeah.
So here, so I mean, not to say that they're right or wrong in between, but these are research houses. Well, PwC is an accounting firm, but it has a research arm to it and a research practice to it. And they're not alone that they're predicting that this industry will be in the trillions of dollars, right? And if you think of the size of this on a revenue basis, Apple, I think, is what, at about $2.2 trillion of market cap, Omar? I think in that vicinity, right?
Nope. 3.7.
Sorry?
3.7.
Yeah, so this is suspected to be 4.5 times the size of Apple, this industry, which is like massive, right? Like completely massive. So again, something we do want to be part of. Let me just move on here. So, why these three? Well, we are deeming these three as kind of the best in practice, right? One is NVIDIA. They make, high quality, high priced parts, chips, right? AMD, they make a very, very good chip, or a set of chips, potentially not to the same degree as NVIDIA, but certainly they cost a lot less. So there's certainly a play there. And TSM, and these are very broad strokes. Yes, they are all within the same industry, but these are very broad strokes. But TSM, they are the manufacturer, like you can think of this as like quote unquote the OEM of these companies, right? Like NVIDIA and NVIDIA and AMD would go to TSM to say, hey, we designed this thing, can you go build it, right?
Yeah, now
Sorry.
the idea is simple. NVIDIA has the most advanced technology and the most advanced software called CUDA, okay? That creates a moat around their business. However, it is quite expensive, and they have a substantial backlog of inventory they need to fill. So if you went to them and said, hey, I need something, they probably couldn't give it to you. First dibs go to companies like Tesla. Now, there are a lot of companies who want their products and software, but they won't be able to get it simply because NVIDIA cannot produce them fast enough, okay? So who's the second player? Well, the second player is AMD, Advanced Micro Devices. They are doing great. Now, they have a chip coming up that is very competitive to NVIDIA's Blackwell chip, okay? And that Blackwell chip is the industry standard right now. So AMD's chip will not be quite as good, but it will be very close. And for all those smaller businesses and companies that don't require all that extra stuff, well, they can go with AMD. So think of NVIDIA as being the leader, the technological leader, the market leader. And think of AMD as being number two, but a very respectable number two, okay? Now, both of these companies can only produce, so they only come up with the ideas of what these chips are going to be. They don't actually make those chips. That is a very advanced manufacturing process. There's a company called ASML out of the Netherlands that does a lot of the fabrication of these chips. And then there is Taiwan Semiconductor, which actually manufactures the chips, okay? So Taiwan Semiconductor controls about 60% of the global market when it comes to chip manufacturing. And the reason is because, again, they have a technological advantage. While they're producing 3 nanometer chips, the second placed players like Samsung cannot produce that. What does that mean? That means Samsung's chips are less efficient, consume more energy, and overall are not going to be good for the consumer, are as good. So Samsung would be a secondary choice. Everybody wants to have Taiwan Semiconductor producing their chips. So it all kind of ties together. NVIDIA being the lead, AMD being number two, and Taiwan Semiconductor being by far the world's best manufacturer when it comes to chip production. Let's keep going, Matthew.
Yeah, so we can put some numbers behind this, right? So on the Nvidia scale, there's about $3.3 trillion of market capitalization in January, and we can see if you just go down the scale here, if we go across to AMD, oh, it's not listed here, but it's less, and then even less so is TSM, right? So if you look at here at AMD, yes, they have two common products, Hopper and Blackwell, preferred choice as for certain business centers here, right? And if you see here, NVIDIA's global GPU segment market share for 98% in 2023, sorry, 2022, and 97.6% in 2023, right? So,
and GPU is only one.
One will say it's almost a monopoly.
Well, there's also CPUs. So AMD produces some GPUs and CPUs, computer processing units, graphic processing units. But AMD is getting more and more into the GPU space. And as they catch up technology-wise to NVIDIA, I don't think they're going to catch up entirely, but there is a huge secondary market. If you don't want to or can't go with NVIDIA's chips, AMD becomes a viable second option. And that's what a lot of companies are doing. And we're betting big on this.
Yeah, so...
And also, as a result, I was going to say, Matthew, as a result, we have a greater investment in NVIDIA than we do in AMD.
I also would not use the word betting. Because we're certainly not betting. I would say we are positioning ourselves to take advantage of this opportunity. There's a significant difference there.
Yes.
So, yeah, David agrees. Okay, thank you, David. All right.
Investing is not gambling.
What's that?
Not gambling.
Investing is not gambling. It can have sometimes the same outcome and feel like you gambled because there are risks and you will be wrong. But investing is not gambling.
No,
So,
David, I'm using a quote from Peter Lynch's book, One Up on Wall Street, where he says, when you have conviction of stock, bet big on it. So I'm just using that quote. In no way did I mean that we are betting. Betting is not investing. This is not gambling whatsoever. Ultimately, stocks go up or down based upon the amount of money that company makes or doesn't make.
Yeah, we can see here, like these, and this trickles down into margin, and you see, certain analysts predict, a 60 to 180 billion dollar increase in revenue, or 3 times that. Even if you kind of discount those estimates for kind of, whatever inherent biases there may be, it's like, wow, that's something to look at, right? And we're quite happy to take that position, right? This is the second page of NVIDIA we're going to that we presented here. If we look here, Oma mentioned CUDA before. You can see who some of the largest clients are, and these clients, these are like literally world-class sized companies: Google, Microsoft, Meta, Tesla, Amazon. Now there is a drawback. There's a drawback that some of these companies are beginning to produce or are thinking to produce chips that are internally made, so that does run a risk there. But for the time being, that risk has not really surfaced, right? We do see a little bit of that in Tesla. We see a little bit more of that in Apple. But again, right now, I wouldn't say that's a huge issue for NVIDIA. But it's something we want to keep at the back of our head, despite how promising this opportunity looks, right? So AMD, slightly different scenario. Without saying it's a cheaper version, but like it's a more efficient version of the AMD, of the NVIDIA product suite, right? And rightfully so. Like some of these chips, I've read some of these chips are hundreds of thousands of dollars per chip, right? They're not cheap items, especially being made from
Blackwell doesn't cost that much, but there are some chips, very few of them, that do cost in the hundreds of thousands.
Yeah, a few. It's crazy because some of these are super small too, right? But I guess you're paying for engineering and whatnot. But you can see here AMD rightfully kind currently holds less than 5% of the GPU market and 11% of the overall AI market, right? So it's a lesser player. And it's actually interesting that now we see for a good chunk of time, AMD and Nvidia are priced not too far apart, right? Prior to this, like about a year
What do you mean,
ago,
Matthew, in terms of PE multiples?
no, not in terms of PE, like the actual nominal value of the share, right? Because before Nvidia was like $1,000 share, $1,000 stock price, right? And it was generally not generally, it was less affordable, you could say, for the average investor to buy like a board lot or 100 shares if it's $1,000 a share, right?
Yeah.
And then they had a great big stock split, and that stock became quote unquote more affordable to more people, right? So I'm not obviously there's differences in market capitalization, but the affordability of a single share now they are closer in range, right? And there's a whole kind of sub-discipline within finance that talks about where corporate finance departments and their investment bankers on the other side of the desk want to really see their stock being priced at, right? And I think that this is true in this case as well. Anyways, long story short, obviously the market capitalization is a big difference, but AMD is a cheaper to deliver option, and we want to be part of that as well. Because if there's, NVIDIA's C-suite have basically said there's, I think what you've used is insatiable demand for these products, right?
Right.
And if you cannot wait to have these products, a lot of this business is also going to go to AMD that could be more efficient offerings, right? Let's continue on here. They've quadrupled their R&D budget. That's excellent for a technology company. And again, not quite the same, but AMD's latest AI-related revenue has jumped 115% to $2.8 billion. You can see that there's a considerable difference in I guess variance between the revenue number for AMD and the revenue number for Nvidia, right? No wonder one is priced a little bit differently, right? Or at least the market cap is significantly differently, right?
Yeah, that's in terms of market cap. Right now, Nvidia is worth about 3.5 trillion, and AMD is worth about 200 billion. So that would be 17.5 times larger. Nvidia is 17.5 times larger of a company. Although, yes, as Matthew was mentioning, nominally, the stock price is very similar. But keep in mind, Nvidia is a far, far, far bigger company than AMD, okay? It's really encouraging and nice to see AMD's AI-related revenue jumping 115% year over year to 2.8 billion. And the CEO of AMD, Lisa Su, fantastic, by the way, says that spending on AI accelerates to reach 400 billion by 2027. Okay, so we know in the next number of years, companies will be spending a lot of money on transitioning their business to having AI help them further their business along. And it says here AMD can capture 20 to 30% of the $400 billion opportunity. That is huge. All right, so there's a lot of upside potentially on these companies, and that's why we have a concentrated holding in them.
So if you move on to TSM, where do both these companies, AMD and Nvidia, where did they go to buy their product, right?
Only one place you can go that if you want the best, you got to go to one place. That's TSM.
Yeah. So again, this is like, you're kind of going to like the OEM of this, right? Yes, we do understand that there's I would say that there's a higher risk of kind of geopolitical uncertainty surrounding TSM. But again, we do believe that, if it's going to affect, if that geopolitical risk was to come to surface, then the entire chip sector would be at risk, not just TSM, perhaps TSM a little bit more so, but regardless, we want to have some allocation to TSM as well, right?
And that's why TSM is quickly in the process of building another manufacturing facility in the States. I believe it's in Arizona. And
good call, TSM. Good call.
Yeah. And the reason they're doing this so quickly is because of that geopolitical risk. If something were to happen in that region, and just to say something were to happen to that one factory, Taiwan Semiconductor, it would have catastrophic effect on the world's economy. It would be huge. So, because there's chips in everything now. We are living in more and more of a connected world. So that factory is really important politically and also in terms of the global economy. So I'm glad to see TSM opening up additional factories globally to alleviate that risk, or at least to minimize it.
Yeah, absolutely. So again, we like this trio of chips here. In terms of our holdings. Now, don't forget these are not the be all and end all of list of chips here, guys. And indeed, you can buy semiconductor indices, right? Or ETFs, I should say. There are ETFs out there.
Yeah,
We
like the
prefer
the VanEck ETF, which is SMH.
SMH, yes. You can buy those ETFs. We have chosen to hold in the fund these specific stocks, Nvidia, TSM, and AMD, because we want the analysis to be focused, and this is the way to do it, and we are happy with what we are seeing here, right? Okay, so what are some concerns here? Because the sky, I would say, listen, like the sky is quite blue for AI. You do hear about, like, literally every day on the news, you'd hear about something related to AI, like literally every day, right? But there are certain concerns, right? Internalizing the production effort. We've spoke about that as well, especially among the larger companies. There is a limited supply, right? So Nvidia is not really like they're making a lot of money. They're doing very well, but like they are leaving money on the table because the supply is limited, right? Some people and again, some people are going to do then say, okay, I'm going to develop these internally instead, right? And then the last two. Well, we've spoken of the last one here is global political risks, but the second to last one, which we haven't spoken about, is tariffs. And tariffs, tariffs have they've come back for an encore performance again, with the new presidency coming in, and we will not know the impact of them until after January 20th, right? We simply will not know. We can speculate, we can have fun and talk about it and extrapolate and joke about it, but we won't really know until after Donald Trump takes office, right? So, but again, it is a risk point, and part of the volatility that's around these stocks is relating to the newness of this market, as well as the uncertainty around it, and that some of that uncertainty incorporates tariffs. That's the way that's the reality. Okay, so our fund, guys, here's a snapshot of it as of the 10th of January. Okay, we are adequately allocated here. Generally speaking, we're looking to add a little bit more to Google, and to Apple, and to AMD. But the rest, we're pretty comfortable with that. Nvidia had a nice run up, so we wouldn't mind adding a little bit there as well. We're likely going to start looking at some exit strategies for Airbnb going forward. Nothing wrong with Airbnb in our judgment here. Just I believe that the opportunity cost of this money can be spent in more efficient ways elsewhere. So may be exiting that in the future, but have to be at the right timing.
And this also has a 3% cash position. Okay, so the AUM includes a 3% cash position. We always want to maintain a cash position in case something happens in the market or there's extraordinary opportunity. Another good thing about this fund is that there's a continual stream of new assets coming in, which allows us to constantly average in and keep buying on dips like this. So that's also great to see.
Yeah, and we run over some Bitcoin, guys. Again, this is an alpha fund. It is meant not to really hit just singles or walk onto first, to use the baseball analogy. So we want to have some higher risk positions in here, and we definitely have included Bitcoin as a potential, not potential, it is in here, 6%, and that is the reason why it is in there. Okay, so again, as of the 10th, 41 written puts outstanding right now. If everything got put to us, it would account for about 17.5% of the portfolio, so not a bad chunk there. So, if not, I mean, another way of saying this is that if all of our outstanding put options expired worthless, our cash position would go up by 17.5%. We've been a little bit light on covered calls. Reason being,
Mainly due to seasonality, right? You got seasonality. You have an incoming president, which is considered to be bullish for the market. So writing covered calls in this stage could be limiting our upside. We don't want to do that.
yes, this is not the time, generally speaking, to write covered calls unless uh, unless they're going to potentially exit a position, like specifically exit the position, and are not in a hellfire rush to do so, because just because you've written the covered call certainly doesn't mean that you're going to be exited. It just simply means that you're willing to depart of your shares at a certain price within a certain time. That's all it really means. So again, the average days to expiration of our calls and post about 25 days. Optimizing the use of that theta curve, which we all know so well. And yeah, that's the fund in a nutshell.
And I just want to talk about one more thing, Matthew. Since July 31st, since we've, like I said, we've been more fully invested in the fund, we are up on the NASDAQ and the S&P by a decent amount. And that's exactly what we're looking to do. You're not going to always outperform. There'll be ebbs and flows, but over a period of time, that's what we're looking to do. We want to get a rate of return above and beyond that of the index, both the S&P and the NASDAQ. And that's what this fund is designed to do. Okay.
Yeah, and on that same note, right? Like, you know what? It's you're at kind of this crossroads where performance is marked on a calendar yearly basis, right? But like the performance of Nvidia or Tesla or whatever else we have in this portfolio, they couldn't give a damn that performance is marked on a yearly basis on December 31st, right? They're going to grow when they're going to grow, right? And that's the end of it, right? And again, this is as it says here, this is a longer term investment, and it is a growth investment, and we're looking to see what these things can do over the next 3, 5, 10, 15 years, not necessarily in the next 1 or 2 months. So like, is it nice to beat the market every month? Yeah, absolutely. It's nice to beat the market every year, every 5 years, right? On a continual basis. That's even better, right? That's a story that's much more worthy to tell. So, and hopefully we're positioned well for it, and we believe that we are. So, absolutely, we believe we're well positioned for that. Okay, so what to look out for? So we've seen a little bit of it's been a bit of a rough start to January. We've certainly seen this, but like we do rely on a kind of fundamentals here. I would say fundamentals from like a true fundamental perspective, but like some seasonality tends to say this is supposed to be a well-performing month, right? This month, right up until the end of April, is supposed to be well-performing months. And Nasdaq has produced an average gain of 2.4%, right? 65% of the time. That's great. That's good data to lean on. The other kind of macroeconomic data to lean on is that we're expecting interest rate cuts in both US and Canada. And sometimes that's a big driving force. A strong statement by a government official, be it the FOMC or whoever, often goes a long way to spurring on the stock market, because it's publicly announced, it's instantly disseminated, and people can act on it right away, right? And again, we are in a rate lowering environment, despite what the FOMC said last week. And what they said last week in a nutshell is, yeah, we're going to lower rates, but like, you know what? It might not be at the pace that you were expecting or the pace that we had been previously planning on doing so, but they'll be lowering rates, but perhaps not as fast, right? That's the executive summary. But we're also taking out of that yes, this is a declining interest rate environment, right? And that brings some decent tailwinds into financial markets, and we'd love to take advantage of them. So that's what we're looking for into the next little while. If you have any questions about this, contact Omar Khan, David Jarvis, and myself, Matthew Todman. Our details are here. We leave this on the screen for not a few minutes, but a few seconds here. Feel free to get in touch with us at either of these phone numbers we have listed or at these emails. And lastly, this is our general disclaimer. Our investment fund manager is Quartron Capital, and we're not meant to give you any trading advice or investment advice here. And you should seek your professional your licensed professional in your respective jurisdiction. All right, guys, if there's any questions, we'll take them now. But thank you so much for your time. David, Omar, any words you'd like to add here?
No, I just want to say I'm really excited about what AI is going to bring to the to humanity as a whole. I think it's going to be a very vastly different place, the world that we live in. But it's going to take some time to unfold, and there'll be a lot of winners, a lot of money to be made out of this, and we hope to capture a good chunk of that. David.
I think the only thing that's important is that these stocks are volatile, and so they have a tendency to go up more than when the market goes up, and goes down more than the market goes down. That's fine. We've talked about this before. It's the performance over time, not how it does from one month to the next. That being said, I think that the next few months we could experience some heightened volatility, not because there's something fundamentally wrong. It's that we have a new president coming in and we really don't know what he's going to do. And there's a significant gap between his, I'm going to like this. There's a significant gap between what he says and what he can actually do, or when he opens his mouth and how it's engaged with his brain. So, um, he's been broad swiping a number of different countries, people, Canada. That's fine. But it's also not clear what the agenda will be of the Republican administration. We'll know in the next few months. And of course, it's going to trigger some, I expect, some increased volatility. So everyone's got to be aware of that, be patient, and ask yourself, where am I going to be 2 years from now, 3 years from now? And I think you'll all be pleasantly surprised. These are growth companies. And basically, the United States is the place to be if you want exposure to growth. That's it.
Yep. Any questions there, Omar? I'm on my screen. I can't really see them. Any questions up there?
No questions. So otherwise, guys, thank you so much for joining us. As always, the replay will be available on YouTube. And always reach out to us if you have any questions at all, if you're looking to invest in the fund. Thanks, and we'll see you in a couple weeks. Take care. Bye-bye.
Thank you, guys.